Hi guys, welcome to my YouTube channel once again. So this is the part two of our topic: how to identify quality breakouts before the crowd does. And based on the topic we treated before, which is how to master break and retest in trading. So break and retest is like a common pattern because the way price action moves, how it forms supports and resistance. Price will not always go in a straight line. So understanding how this strategy works can actually give you an edge in the market. So here, the part two, we'll be going into practicals, more. But not all breakouts are created equal. You understand? Some are traps and some are really, they are gold. Let me use that word. So how do you know when a breakout is actually worth trading? How can you tell? It's important. Because you don't just say, okay, break and retest, I want to, no. You need to know how these breakouts form, what makes a valid breakout, and what makes a breakout not valid before you can now say, because a lot of people end up saying, okay, I want a break and retest. They see a breakout, they enter, they get stopped out. The market even reverses after their entry. It now looks like, oh, what am I doing? You get. So let me show you a checklist of how I identify my high quality breakouts. That's the first thing I'll be doing. So the kind that are more like that are more likely to give clean retest and big moves. So first is structure first. You need to identify a clear structure. You need to know what a clear structure is. If you've not seen my video on market structure, then you need to visit my channel and watch my video on market structure. I think you might get a more reliable understanding from the video. So you look for a clean resistance support and resistance and a clean horizontal support and resistance. This is our horizontal. Sorry about that. So this is, let's say, this is our horizontal support here, and this is our horizontal resistance at the top. I'll be taking this away. I don't want to show you the chart just yet. I'm trying to make let's say we have our horizontal support here, then we have our horizontal resistance right here. This is, for example, we have a support resistance. Do you understand that fully? So we have our support and resistance. We need to identify this. You need to identify a clear support and resistance trend line. Do you understand? This is very important. It might not even be a range bound. You get. It might not be a range bound. It might be a trending market. It might be a trending market where you need to identify, supports and resistance. And it might be a trend. This might be like your trend line, and this might be sentiment, so far. And you might need to understand, support and resistance, because eventually of the market movements, eventually you are going to have some sort of breakout at some point. You understand? So this is your resistance, and this is your support right there at the bottom. So just make sure it's valid. And what makes it valid? The time frames that you are trading on. 4-hour time frame support and resistance cannot be compared to 5 minutes time frame or 15 minutes time frame, because the 4-hour time frame is more effective due to the fact that it shows the bigger picture. And the way I trade, I'm not a scalper, but the way I trade, I'm all about the bigger picture. I'm all about how the market reflects to us long term, the long term process. Because if you're scalping, you are just I don't know. We have 6.6 trillion, about $7 trillion in the market every day, and to me, if you are scalping, you just, I don't know, I see you as money hungry. A lot of successful scalpers are out there, but you need to be cautious of how you trade, and you need to like have a very good system. Plus scalping, I don't know, it causes emotional. It drains you emotionally and mentally, so it's not really my style. So yeah, you need to find a clean level of support and resistance, and finding that on a higher time frame will actually give you a stronger edge. You understand? But make it very clear and clean. No corrections at the level. Clean retest of the support, clean retest of the resistance, just like you are seeing here and here. So yeah, so if the price keeps getting rejected at a level 2 to 3 times, you understand, that builds pressure. So if you see a price rejecting at that support or resistance level, like this, we have here one rejection, another rejection. This is making this support very valid. You understand my point? Then look for volume spikes. What is the volume do? I have my volume blocks here. If you don't know what a volume block is, look at what it is here. This is volume. You understand? Volume for Solana. So you can just go to, if you don't have it on your chart, but it usually comes by default on the screen. So you can just go to where you have your indicators and then look for your volume. Then thirdly is candlestick clue. You understand? So since you are trading breakouts, you need to look for candlesticks clue. So you need to make sure that the breakout is clear. You understand? A strong breakout should be wide. You understand? With no wicks. You should not have any wicks. When I say wicks, what I mean is all these candles that have strong rejection from the candlestick, long rejections here. Not that you can see we have some that are full candlestick blown out. You understand? No wicks here, just the candlestick itself, green or red. You understand? Why some we have this tiny line in between the candlestick. It shows the highest point or the lowest point where the candlestick have gotten to. So no wicks. You understand? Just full breakout, just like we have this long candlestick here, the green and red. You understand? So it should be, and it should close above the level. You understand? So avoid breakouts that close as indecision or doji. So when a breakout happens and it forms a doji, or the candlestick is just not full like what we have here, just avoid it. Avoid these candlesticks. It just it shows you indecision in the market, and you don't want to be around anywhere that shows uncertainty. Then 4, the breakout timing. For me, the best breakout hours are around 12 p.m. to 3 p.m. UTC. You understand? Or US session opening hour for cryptos. You understand? So if you have breakouts around these hours, because these are hours where large traders are coming in, you have large volume coming in due to the market opening. We have morning session in the US, we have more volume coming in, and you are all about, like we discussed about the volume indicator, you are all about the volume. You want to be in the market where a lot of traders, and when a lot of traders are in the market, because what does it do? It spikes volatility. So it makes so it saves you from unnecessary and slow movements. You understand? So once you are in the trade, so long as you join the trade, you join the trade with an entry, with an institutional entry, it gives you this spike straight up to your entry, and it doesn't, you don't have to waste time waiting for trade, except swing trading, of course, will require you to wait, but best time for your entry, so you don't get stopped out or suffer from manipulations, or because during Asian session at times you might get stopped out. You understand? Especially in the forex market, this is very common. So you need to be around the breakout you need to be around the you need to be in your entry around the best breakout hour, which is 12 p.m. to 3 p.m. UTC. So then look for previous liquidity sweeps or trap moves. Make sure that if price grabs liquidity, let me just tell you this rule. If price grabs liquidity, but if you don't know what liquidity is, it simply is like a fake move, you understand, above key levels. So let's say price breakout, causes a fake move, like maybe immediately the breakout, then it causes a wick and comes back down, you understand, before breaking out for real, you understand, that signals a stronger setup. So let's say price breaks out of this level with a candlestick and forms a wick, then another candlestick breaks out strongly out of this level, then it shows stronger liquidity, it shows stronger market maker involvement, you understand, like strong market maker involvement. So that is actually a stronger signal for you to be in the market at that moment, you understand, because price has already taken liquidity out. That fake out has cleaned out the weak hands and weak traders in the market. So now the institutions are coming in with the big, like I said, candlesticks depict human behavior in the market, and this is what you're all about. You need to learn how to understand the candlesticks movement in the market. So after that, when you find something like that, then yes, this is the right time for you to strike. When all or most of these signs align, if you have 3 or 4 of these signals aligned in the same asset or market that you are trying to trade, then yes, the breakout is worth trading, you understand. So this is my part 2. Then in our next class we'll be talking about how to actually trade this market live, you understand, on the chart, how to use live candlestick. I'll give you some examples and we'll discuss how to trade it. But now I believe you understand how to identify stronger breakouts. Yeah, thank you. Don't forget to hit the subscribe button.